we can start. The reason we have 5, because we had 3 from the regulatory side. We need to have 5 from the private side to make it work. So that's the reason why we have 5. And the other reason is that you see one in our initial announcement, we didn't had one person called Diogo there. And I told him that he cannot leave Singapore. He must extend his stay on a Friday or Thursday. And I don't know what he's going to do here, but he's an excellent talent as a co-moderator also. He just realized that his role here.
Once I saw the questions, I was like, oh, I'm going to be the co-moderator, actually.
And Piyush did a great job in leaving us with a question to start with. And I kept Balaji close to me because his response was very violent. So I told you, hold on, and we will come to you close to me as we get the questions right. Okay, we will start, and I don't need them to introduce themselves because I have only 1 hour with 5 people to respond to questions. So you can Google them, who they are, extremely bright people. So Piyush left us a question because I'm sure by the way, so before we start, both of them will have given in principle approval. Your license will not be taken away based on what you say here. Okay, so so be safe with that. I know there are some reporters here. Please don't make that a headline.
It's done. It's done.
Too late.
So please don't do that, or else you'll have a tough time coming to the next event. So with that disclaimer, and my job is not a job from MAS, just a good friend of these people. Piyush left with a good question that the regulators kind of stayed away from that private money question. In fact, he was trying a lot to get them to respond to that, except Jessica. We'll start with Dante, you, Eric, Diogo, and then I'll come with the response of the day from Balaji.
Spicy take.
Spicy day. So respond to the question Piyush ended his session.
Yeah. Well, first of all, it is a real honor to be on the stage with such brilliant people and to follow such brilliant conversations thus far. So to have heard part of the earlier conversation would have been to almost hand back the in-principle approval that Circle just received in Singapore. If the sentiment and the animus from central banks against private sector innovation on how money moves is so high. And so I do think, and I, as an ambassador to Elevandi, for Singapore FinTech Festival to remain vibrant and for it to remain a go-to event, we must continue to enshrine this idea of principles. And so I'm a former Libra person. I'm the guy who was the human heat shield when Libra was introduced. Pre-Libra, the idea of central bank digital currencies was buried in the annals of the IMF and the World Bank as a technocratic idea, but that would have never ever been brushed off. Post-Libra, on the basis that anyone, anywhere, armed with a basic internet-connected mobile device could have access to a trustless peer-to-peer global financial system, suddenly the idea of what crypto fundamentally represents became all too real. And fast forward to today, 105 central banks, representing 95% of world GDP, are tinkering on the margins of this societal innovation called money, something from which the central banks are empowered by the people to create and have authority over in the first place. And so I don't think there is a boundary between responsible private sector issued money or digital currency and public money. The boundary, and I have a paper on the case against CBDCs in the journal International Economy right now. The boundary is about how money moves. The reason you could find the dollar and the Coca-Cola under any tree anywhere in the world is because of the idea of fundamental trust in what it represents. But the reason it can move is because of the rails. And crypto innovation is a technology. Crypto is derived from cryptography, which is the very technology that keeps your planes safe in the skies. And public blockchain infrastructure is an improvement on financial markets infrastructure pre-2008 that was closed and proprietary and fundamentally vulnerable. So I reject the categorization that the only type of money that can be trusted is publicly issued. Last quick point, 50% of the world's population are subject to a domestic currency environment that's hyperinflationary. And in some countries, the currency isn't worth the paper it is printed on.
Okay, so
Mic dropped.
Very hard to follow.
I thought the spicy take was going to be apology, but it's a great start.
My goodness, it was a response, like almost waiting to come out. Eric.
I think when we look at what the blockchain technology brought to the space is really true control, a true ownership, not only of money, but also of data and identity. And the fact that we're able now to give back that control to individuals is extremely powerful, and it's what is powering Web3 and all the innovation that is out there. Whether we call it private currency or public currency, at the end of the day, it's money for the people, and we're giving back some of that control. Of course, that comes with huge responsibility. And as an industry, we're here to provide the tools and the safeguards and the education to help people take advantage of that new power that is within them. But it's of course a very big challenge, and we're still very early in the space for us to get that to the mainstream in a way that is safe, and again, people can really build upon it. When we look at Web 2, 20 years ago, and what it has created, tremendous values for economies, GDPs, etc. But most of the value that was created accrued to the top companies that were powering it, because the customers was the product. With Web3, with blockchain technology and those private currency, we are sharing that value more fairly and more equitably to all the participants. The fruit of your labor on a network, as you engage, as you contribute, you get some back, whether you're a user, whether you're a creator, whether you are a developer. So I think that's extremely powerful innovation, and we need to find ways to get it to the mainstream in a safe way.
Well, both you and Dante argued for that in the new network, a new form of money is essential. But I'll come back to the question why it has to be only private. It can be a broad range of currencies. We'll debate that. Diogo.
Yeah, I can go and say, usually in these conversations, and we saw that in the prior conversation, there's this equivalency between CBDC and stablecoins, and they effectively end up, the conversations of being one replacing the other. I have not seen any CBDC that actually has the characteristics that have given stablecoins the product market fit. So the reality is, as it stands, none of these that I've seen will come out to market and will actually fit and replace and be something that actually is the same type of product market fit. So they're just not the same thing at all. The types of characteristics that you need to have for a CBDC to truly meet what folks that have created stablecoins have actually given out to the world is very distinctive. And I think it's very reductionary to try to make these things the same thing, because they're not substitutes of one another at all. They might be competitors, but they are not substitutes. They do not have the same characteristics. Second thing that I wanted to mention here is that also came up in the prior conversation is there's this distinction between public money and private money, and there's this categorization of some of these cryptocurrencies as private money. I actually think that categorization is incorrect. I think the categorization, let's for a moment use Bitcoin as the only cryptocurrency that I'm talking about right now. There's many of them, but it is public money, private money, and Bitcoin is truly public money. And I think we have to actually take that. It is not private money. It is truly decentralized, globally accessible money. It does not fit at all in the category of private. We don't know who created it. There is no one entity running it. We cannot call it private. So I wanted to make those two comments.
Okay, now, perfect entry for you.
Perfect segue.
Yeah.
There you go.
Because you're not asking for license, so you can say what.
Sure. That's true. So I think just to recalibrate, it's really not about how states regulate Bitcoin, but how Bitcoin regulates states. That's say Bitcoin.
Sorry, repeat again.
It's not about how states regulate Bitcoin, but how Bitcoin regulates states.
Okay. What
do I mean by that? You can best think of Bitcoin and cryptocurrency and the internet and encryption more generally as a global government of governments, something that enshrines human rights and property rights of citizens around the world, even when their governments are, adverse or hostile or even totalitarian against them. Instances of hyperinflation were cited. We know that there are countries that are building, like surveillance currencies. We know that there are many instances of freezing and seizing of accounts, of deplatforming and unbanking. And the thing is that everybody here, you may be, by day you might be a, high-flying executive or a regulator or something like that. But at night, you're just a citizen like everybody else. And for all the 50 or 100 companies where you have accounts at them, bank accounts at them, you don't want your assets to be frozen or stolen. You're just a citizen and you're powerless, just like the average person. And so therefore it is in your interest as a citizen not simply as a regulator or an executive, to support those same global human rights and property rights, right? So that's, I think, where I start on this, is something which, you know, the smartphone is like this new franchise that's been given to all these people, and it's not simply a communications device, but a way to protect human rights. So that's like the way to start, right? And then from that, you get to, well, you know, you want to have a very short kind of law, which is something like the right to buy, sell, send, and receive cryptocurrency shall not be infringed. Start there. And then you can try and chip away at that and give exceptions and so on where, okay, fire in a crowded theater and so on. But fundamentally protect that right to hold, send, receive, store, you know, cryptocurrency. As for like CBDCs and so on, one way I think a lot of people are, you know, say is they're like, oh, well, you know, we need to have our sovereignty. Domestic interaction with your own sovereign currency is totally fine, but all of your citizens are going to place the equivalent of international calls as well. For example, if they're on WhatsApp, they might have some local Singapore numbers and some international numbers. We don't even think about that. They're all mixed together. In the same way, as if you just think about your communications, your transactions will be the same way. You're going to have, you know, maybe 50% of them overseas. The smaller the country is, it might be 70 or 80% of them. And that's going to mean you're going to be engaging with these cryptocurrencies for overseas transaction and communication. You're not going to be able to exert control. So once you realize that, lean into the future where you cannot have control and you cannot coerce and you must convince. And that's, I think, the overall mindset to take, that A, it's a human right about human rights and property rights, and B, convince rather than coerce.
Okay. Well, as you are speaking, there's a few questions coming in, but I'm holding those questions so that it will be interesting response I'll get from each of you. Jessica, you know all this, how they responded to the question. I'll give you a luxury of giving a state of crypto where we are today, and then it gives us a level setting feel where we are in terms of the market and the direction going forward.
Sure. I think that a lot of my job today is going to be the level set
Yeah.
and kind of bringing things to the high level. So why don't we start with just kind of where we are in the market today and a few takeaways from where we are. One observation in terms of the crypto market today and the recent crypto winter that we've gone through. One thing, I think a lesson learned out of that was that the risk come to fruition and create the downturn or the winter are certainly risks that we are quite familiar with in many ways. Issues of credit risk or liquidity mismatches or just basic risk management. There are a lot of things that went wrong that we are familiar with and we should not be surprised by when they come to fruition. I was not at all surprised to see at some point the market correct, if you will, as any market does over time, right? Not surprising, fully expected. I think one thing that I did not necessarily expect and pleasantly saw was institutions, some particular more centralized of the institutions, acting to then act in a capacity that would look to provide a safety net almost to certain actors in the space to try to support the continued innovation and growth of the market while recognizing that some institutions needed to be corrected and did end up failing. But that desire to behave in a way that we're also familiar with in the financial markets of saying, hey, where there is good innovation that it is worth saving, having a participant then act as that institution to try to put guardrails around that and save what's worth saving, I think is just something I wasn't anticipating about what happened. But I think something that I'd say we're really in right now, when I watch the activity both on the crypto side and then in more existing financial institutions, their adoption of and participation in various pieces of it, is I think that there's a real, there is danger in referring to activities using different language when they are the same activity that we're very familiar with. And on the regulator side, there's also danger in calling everything a novel risk when it's not necessarily novel, right? So on the private sector side, I think you've seen there's a difference in culture that is coming together here. One set is a very a tech-heavy culture that's incredibly skilled and entrepreneurial, and another set of long history of financial risk management culture that has the scars and the battle wounds of the financial crisis and other history, and those are merging. And I think what you've seen is the incomplete, merge of that, allowing risks that we are well familiar with to come to fruition because we did not involve enough the people who have that history of risk management. But then also I think the risk of regulators taking the wrong lesson out of that and then saying simply because that occurred and the banks were not as fully involved in that, that means the banks should not be involved in that at all. And I think that is not a good path forward and not the right lesson to take away from that because the banks have a very long history of very highly skilled risk management, and perhaps are some of the professionals that should be integrated together going forward.
Thank you. Well, I'm almost thinking of junking my second question because I got to get this answer correct. When all of you talked about that there's so much of goodness about this lovely private currencies. But if you ask many of the people on the street, last 2 years who have invested, they lost millions of thousands and thousands of dollars in their investment. And you talk to them this thing, they're going to slap you. Literally, they get so angry when we talked about that. They bought all this currency, they sold this lovely, some of the advertisements were quite irresponsible in this space. How do we ensure that people don't indulge in this narrative, which I may respect on the long term, all this thing you talked about, the virtues of this currencies and this new technology. But they have gone and they caught all the narrative, they bought this money and speculation happened, $2 trillion went out of the market. You can always say that, okay, in the stock market you also lose that much money, but that's not an argument to make. Just purely on your own market strength, how do you get over that issue of speculation, getting people who have no clue about this asset, getting into the space, and do you take something from that learning of a loss of $2 trillion out of the market?
Should I respond?
Yeah.
So Carlota Perez has actually written about this, about it's like, you've heard about the Gartner hype cycle. It actually goes all the way back in history, whether it's railroads or automobiles or the dot-com bubble. This is basically the way that humans install technology. There's a gigantic speculative bubble. There's lots of entrants that come in. There's a crash down, a natural selection event, and then more arise. It's one of those things where...
Sorry, Balaji,
yeah, go ahead.
a small...
Yeah, sure.
On that dot-com, the people who invested were generally affluent. In this particular market, the people who came in were extremely poor people. You go to Philippines, India, very, very poor
I'm not I'm not so sure about, I think there are retail investors in the dot-com bubble.
Yeah.
But the thing is that, it's something where no risk, no reward. Like in the sense of, you shouldn't invest something, that should be the market education. You should not invest something where, it's not a guaranteed return, right? Moreover, and I think we're going to all learn this, the state isn't a guaranteed return either. Cash is not guaranteed either. Those people who put the converse of what you're saying is those people in Lebanon who put their money in Bitcoin are the only ones who have any savings at all because the currency's been destroyed. Those people in Venezuela, the only people who have money in Bitcoin, they're the only ones that have any money at all. That's a flip side of what you're saying where the state has destroyed it as well. So you have extreme volatility on this side as well as that side, and people need to just sort of surf. And I don't think that taking away freedom is the way of going about that.
Well, I would say completely agree that you need to go through if this is the internet of value that we're talking about, it's in its dial-up phase. And imagine if you were the regulator of that phase and you had told everybody, stop innovating because we'll never envision what this looks like if it gets to broadband. The second thing is, and I hope it's expressed in the conversation because I'd love to have lunch with some of the regulators later, is that it's neither the crypto anarchist nor the crypto utopian who builds the business that has long-range utility value. It's the crypto pragmatist. And for me, you need it this exact moment in time to occur, what I call a blend of a dot-com bubble and TARP, crypto's TARP moment, to weed out all of the bad actors and the internet funny money and make this market correction a possibility. The other thing I would say, though, it's an admonishment to the regulator and the policymaker, however. since 2019, we have had countless global hearings, countless FSB reports, countless domestic and international efforts to bring this regulation and innovation onshore and inside the regulatory perimeter. New York, a testament to Superintendent Harris, has licensed this industry since 2015, and not a single of the licensees failed. Circle was the first company to get a New York BIT license. And so the challenge is, hurry up and wait for my report is not a strategy to build a business. I'm encouraged today that a lot of jurisdictions like Singapore, the United States, and others are starting to identify the technology and disambiguate it from speculation and trading and call it what it is, a technology. Okay. And so the last quick word would be for the regulators again. You speak of activity-based, risk-adjusted, technology-neutral regulation. Having been in every single one of those hearings, I must say I'm calling bluff. The second you say crypto or blockchain, regulators recoil, clutch their pearls, and it evokes fear. And I think we could do better than that, because now I could argue these innovations are not only withstanding great market stress, they're actually performing to the tune better than many of the alternatives. And so it's not substitutional, it's additional to traditional banking.
Eric, I know I don't know what to put in a, Crypto.com did had this, and as a question here, fortune favors the brave. Was not in hindsight was a bad idea?
I think it's important to support the pioneer, the entrepreneurs, the people who are building new things in the world today. That's how we progress as a society, as individuals. So I think what we wanted to encompass, and we still very strongly believe in it, is that you have to commit, you have to take some risk if you want to build something big. And sometimes you have...
A risk is whose side?
As an entrepreneur.
From your perspective or the consumer perspective?
I think we're trying to encompass the feeling and what you need to create great businesses, great ideas, and to follow through. That was the main concept. I think through bear markets, and it's not the first one that we have in our industry because we're still very nascent and there is a lot of volatility, and I think that needs to be communicated also to the general public. We're not at that stage of maturity and there will be ups and downs. There was definitely a reckoning, especially on risk management. I think it's a very valid point here. I don't know necessarily that we don't have the professionals in our industry, but some of those basic rules were not followed. And a lot of people lost money because of that, not necessarily only because of the market conditions that impacted, as you said, the entire industry beyond crypto, fintechs and all the tech. So making sure there is a premium to people who actually are regulated that follow proper risk management practices is going to be key going forward. And hopefully we get some progress on that front and we get some support for the folks that are investing in this space. For Crypto.com, since day one, 6 years ago, we put compliance and security as the foundation of everything that we do. We KYC'd 100% of our users. We got regulated in all key markets across the globe.
Okay. Well, I think you were right, but I think the kind of messaging went to the public that this is the easiest way to get into the market was, in hindsight, a bit of a early aggressive marketing did cause a lot of damages to this whole sector, especially regulators coming in and putting a lot of friction to the access to this market. So Jessica, and you talked about in your initial thought around this whole risk management around the space, and we have mainstream bank coming into the space also. Your take on what the optimism being shown here and how the consumer react to that?
Well, I mean, for one, in terms of how the consumer reacts to that, I think consumers look to have their needs met, right, at a very basic level. And so I'm an economist by training, so I always go back to, like, what are the basic needs of a consumer? What's at the bottom of the pyramid of the hierarchy of needs for an individual, and what do they need met? And so I think in terms of opportunities in this space, I think of ways in which, if you go to just a basic economic need of individuals, one opportunity is how do you get government services out more to an end user that has some need to be met. So that can be through Social Security payments or other kinds of government and agency outlays that might be through aid, right? That might be through refugee or other kinds of aid and crises. There are opportunities here. So from a potentially a programmable money standpoint, to be able to facilitate the transmission of that of those services or aids to the consumer, right? And that's one. I think the other question outside of what just solves an economic problem that exists are then questions of what solves what kind of creates a bigger pie for everyone in the financial system through efficiency gains. And then separately, then what potentially also helps improve financial stability. And just because of my economics background, I think I put them in that order in general of the drivers is what's an underlying economic problem that the world has that is begging to be solved, what creates a bigger pie, and then we also look to improve the stability of the system at the same time while doing that. And I think in the second piece, in the first piece of programmable money, then we're here in Singapore, we think about things like Project Orchid. I think in the second piece, the next two questions, I think more of tokenization of assets and the enablement of faster settlement. And you get to, Project Guardian, the SIX digital exchange, other activities.
We'll come to the use case shortly to both of all the exchanges here. You call yourself the first fully regulated crypto bank. You have dealt with accredited investors. Do you see the same challenge we saw in this market where retail investors, they were very happy for the first 1 year, then they were...
Our stab at this was the following. You cannot have consumer protection if the regulators and the industry does not have the infrastructure that they need to actually allow consumers to come into the space. If everybody's rebuilding their custody stack, that makes no sense. If everybody's rebuilding every single regulated stack, it makes no sense. And so our take on the market is we only do institutional, we only work with large institutions, anywhere from corporates like Visa or large banks.
And why the distinction? Given you heard that there's so much of goodness in this whole space, why you have made a distinction between a retail customer and a...
Because for the space to succeed, you need institutions to be able to build products in an easy, safe, and regulated manner. So that's what you needed. You can't have the large banks coming to the place. You can't expect a very large bank to come into the space and then just look at this technology and say, hey, I'm going to build cybersecurity technology that is going to protect hundreds of billions of dollars of irrecoverable private keys. That is not something that traditional banks and traditional financial institutions can do. So that's why you kind of like bring this to the space. In part to the prior conversation, I think there was a little bit of a tongue-in-cheek comment around the private sector says that they want regulation, but they don't actually want it. We applied, we volunteered for an OCC chartered bank. We're regulated by the oldest banking regulator in the United States. We are an actual bank. We are part of, we're registered, it's all of it. And there's a reason, and it's kind of interesting for you to introspect, why aren't there more of them? And I think it actually is, from where I sit, if you want, as a regulator, to regulate the industry, your best tools are the regulated entities that you already have. And there has been, for a long time, and there still is, very high difficulty for anyone that wants to be licensed to be licensed. I think you see that on the SEC not really issuing broker-dealers. You see that on the difficulty and the fact that there's still only one OCC chartered bank. You see that on the New York DFS, candidly, on BitLicense and the issuance rate and large gaps of years sometimes in new licenses being issued. So this is not, I think to Dante's point, it's like taking all the pearls or whatever was the expression that he used, kind of like the retracting when they hear this. It is absolutely correct. It's hard to hear both that there's no ways for us to enforce the space at the same time to hear that there's no licenses actually being given out, even for the players that want them.
Yeah. But why was not allowed a retail customer to work with you?
So it's a matter of focus. It's not that we don't like retail customers, it's that our focus is to allow other people to onboard Retail Focus. I am not a consumer founder. there's very different types of founders. My background is actually security engineering. I'm a PhD in distributed systems and security. That's what I do. And so my whole life, I've worked on the back end in allowing infrastructure and having very big infrastructure work. I worked at Square, at companies like that. So that's what I intrinsically wanted to build. And in the market, there's Crypto.com, there's many consumer companies. So our focus was always, no, what we need to do is to allow traditional institutions to come into the space, because there's no way that crypto becomes successful in the world and the traditional institutions are not part of it. We do not believe in that world. And thus we set about to change it.
Okay, you want to come? Yeah.
Yeah, I just want to add one comment, which is maybe an obvious point, but it isn't just crypto that's had ups and downs over the last year. Trillions of dollars was printed in 2020 and 2021 by the US government and other governments around the world. They filled the punch bowl. Tech stocks also went up. All kinds of other assets went up, and crypto also went up, and everything went down, and crypto also went down, right? So if there's responsibility for irresponsibility, I think we know where to place it.
But also same. But same time, I remember I asked this question to Brian, that when things were going good, there was this narrative that the crypto is an anti-inflationary product, but that didn't happen.
So I think that it did happen in the sense of a hedge against hyperinflation. So in Lebanon, in Venezuela, Bitcoin has held its value against a hyperinflating currency. So a better way of stating it might be it's a hedge against monetary debasement as opposed to standard inflation, right?
Okay.
And those are different things.
Okay, so based on the market, we have a different take on this whole.
Well, I mean, there are countries around the world, there's a good chunk of people that have actual hyperinflation. It's not like a theoretical thing.
Okay.
So Bitcoin has actually proven its value in hyperinflationary environments.
Well, we'll catch on that on a
Sure.
LinkedIn post.
Great. You post on LinkedIn, I'll post on Twitter.
Dante, I think you got to take a heavy lifting now, because you heard DG Ravi Shankar talk about he still don't see where stablecoin is heading to. I gave an interview during the festival. I don't know whether I said that, maybe it was early morning I said that, that I believe in the long run, stablecoin can succeed in a particular use case, low value transfer cross-border. I said that. So I said somewhere in between. He made a statement that he doesn't see much about stablecoin. Assuming it's a stablecoin backed by rupee, I think he'll be comfortable there, not by dollar. So how do you argue CBDC, which you are not a big fan of CBDC, I know, all your posting, your testimony, all has been not that friendly to CBDC. Help us to understand how you see these things.
Right. Well, first of all, I do hope I remain persona grata in India.
As long as it's a rupee backed.
Despite my comments. So again, I just go back to, to understand the future of money and payments, you have past as prologue. 95% of all value-added money in circulation today on the planet, period, domestic, cross-border, global, is privately issued. And the way central banks typically protect and preserve the invisible hands that guard central banking and monetary policy, publicly granted authorities, I might add, is by having actors in the system, today banks who participate in the fractional reserve banking model, who are responsible for how that money then moves. And then along comes innovations like Visa and MasterCard and physical checks and MoneyGram and Western Union and SWIFT and ACH. And all of these networks are about the extensibility of money beyond the control and beyond the remit of central banks. And so my analogy, and I have a lot of writing on the topic, and I try to come at it from an honest intellectual vantage point, not from the lens of a company, would be that aviation safety authorities do not fly planes and build jet engines. And the second a central bank crosses the line, and I might add, the line to me isn't wholesale, it's retail. It's not wholesale. But the second a central bank crosses the line, the marginal line of the air gap between the central bank, your wallet, and how you spend your money, I think the temptations are far too great to introduce a form of money that has an enormous amount of societal risks. So much so that I would label them as anti-democratic. Deplatforming people from their money. The specter of making a 100-year technology bet against Moore's Law and against the very type of private sector enthusiasm you've brought to life at the Singapore FinTech Festival. The very type of private sector enthusiasm that has made several unicorns sit on the stage.
I'll come to the unicorn.
And so that's what I'm concerned with, is that the upgrade of always-on device-centric banking and payments eventually will be no different than settlement and outcomes for consumers and market participants, as opposed to a CBDC and a stablecoin are in a bitter contest for one or the other, and if the central banks don't keep up, they're going to be made irrelevant. They have absolute authorities for monetary sovereignty in their domestic environment, but if you want a currency to be globally relevant, it has to have this portability. And bear in mind, Mother Nature has a sense of humor. Just as the world was retrenching and we saw a breakdown of multilateralism on the planet, the COVID-19 pandemic shows up. During the course of that pandemic, I sat on America's Federal Emergency Management Agency's Advisory Council. We moved $6 trillion of taxpayer-funded money through leaky, antiquated traditional banking pipes. And we may have lost anywhere between $75 and $400 billion due to fraud and opacity. Instant domestic fast payment systems that are device-centric, auditable, powered by this type of open infrastructure that we're talking about would complete the system and not disrupt it.
Well, if you take India as example,
Yeah.
the UPI rails they have, they have solved the problem of sending direct benefit transfer instantly at the cheapest, zero cost? Zero cost. So,
Yeah.
so far, it's an America problem. It's not a...
No, that's right. That's right. And we have a former American central banker in the audience. There's no doubt the American payment system, but the reason why,
Yeah.
it's because there's certain aspects of our economy that are anti-competitive.
Sure.
MoneyGram, Western Union, it's a duopoly. Visa, MasterCard, it's a duopoly. And to become a bank which has a taxpayer-supported backstop oftentimes requires crossing these lines. And so we don't have a model that is incentivizing rules-based competition. And so that's my concern with CBDCs at the retail level, is that you're effectively eradicating free market innovation and rules-based competition in your economy. The test for the Europeans in the markets and crypto assets framework, which they created after Libra, and they accelerated after Libra, is will Europe now have, post the passage of these broad laws, a competitive free economy in the digital asset space, or will the European Union remain a flyover zone?
Oh.
So there's a reason the dollar is the currency of the digital economy, and there's a reason the innovation at the largest scale is harmonizing and anchoring to the US as an operating model.
Okay, well, we have...
And Singapore.
We have...
And the MES is great. Almost. That was close.
Okay, we have...
Disinvited
I'm
Dante.
happy when the time goes down because of this kind of conversation. So, Eric, I'm going to switch. If anybody wants to know more about what Dante speaks about CBDC versus stablecoin, do look at his paper. And he's quite articulate about it. And best of luck to your petition, whatever you do in US Senate to make it work. Eric, we believe that a lot of responsibility in this space lies with exchanges. And exchanges have not, in our mind, for now temporarily MAS, have played a very responsible role in introducing this kind of asset to the market. I understand why exchanges don't do it, because the more you have this kind of asset, is better for you, more transaction, more money you make. But if you start thinking about those economic returns at the early stage of innovation, you may end up killing it. Is there a rethinking in exchanges to go slow, build proper regulatory construct, work with regulators out here, and have a more responsible exchanges going forward, disclosures? Today, all the assets which are listed, nobody understands those projects behind it, have no understanding what happened to the project. Dogecoin, the project owners have left, and the coin is still alive. So what do you think about the whole role of exchanges in this whole space?
So for sure, exchanges have a big role to play because today they are the interface between the traditional world and this digital asset world, and they serve both institutions and retail. But I would disagree with the statement that they're not doing their part. Today, there's about 20,000 assets in crypto today. On our platform, we have 200. It's about 1%. There is a very strict due diligence process that goes through all the listing on our platform and on the top platforms out there that are regulated, that looks at the legality of these assets, the security and the audit behind it, whether they have the right liquidity, whether the team has the right reputation and background, has success stories behind them. There's a huge framework that goes behind that ensure we don't bring bad projects, scam, fraud to the market. And it's not a static policy, it's also a continuous improvement that we do, because the market is changing, our space is innovating extremely fast. So it's continuous that we enhance that policy. We declare those policies to regulators in the US, in the UK, in France, in Singapore, and we have some disclosure also to our customers. But I agree, on the education front, we need to do more. Just last week, during the festival, we launched Crypto.com University, with actually a knowledge test to explain the different categories of assets, what is the benefits, the risk associated with different type of assets. So we're making an effort there. There's probably more to do. But I think we have a role to play, and we're on that journey to bring that empowerment safely.
So you prefer a much more stricter disclosure regime for your exchanges, as against today lightweight, hardly existing in many exchanges?
I think it's important to provide as much information as we can to our consumers so they can make the best decision. We are making some calls on their behalf before we list. That's why 99% of the assets are not on our platform, because we make those calls.
You are a good exchange.
That's for our consumer to judge, not for me.
Okay, you have to respond.
I was going to say, one thing I actually think is a potential standard that an exchange might adopt is just publish which assets that exchange holds and in what proportion. Why? Because then they may be dumb, but they're not evil. That is to say, they are aligned with the customer.
Dumb but not evil. Okay.
Right, here's why. Because
I think most evil are dumb people.
well, no, there is a difference, right? So the thing is that if that exchange is losing money or gaining money in a very transparent way in a certain set of assets, the ultimate star rating is that this very sophisticated actor has taken a position in this asset and advertised that they've done so, either public filing or an on-chain, like proof that they have done so. And then publishing that portfolio is, I think, a better kind of regulation than most regulations, right? Because the customer can just look at that and say, okay, I agree or disagree with this portfolio, and then it's transparent, right? That is a different model than simply, disclosures, this and that. Fundamentally, you're reducing it to, are you in or are you out? And that's actually how angel investing works, how other investing works. Are you in or out? The words are less important than, the actual wire or not.
Okay. You looked at public consult. I think you should respond to that.
Oh, what's that? Oh, should I, the Singapore? Actually,
Yeah,
I'll file it.
you better
Yeah.
respond
I'll
to
tweet
that.
it and then paste it in. There you go.
Okay, you can respond to that. Now, moving to Diogo, I think the one of the things you are very passionate about is that the role of infrastructure, security. We talked about the hacks which goes behind this technology. Your thoughts around that? How much because you are an engineer, you have invested a lot in that infrastructure. Right. Share your thoughts around market infrastructure stability from a technology risk perspective.
Yeah, so at a high level, I think all of us have seen the news of hacks. It's, I believe, important to distinguish that there's different categories of hacks. The majority of the ones that you see that have very large amounts sit in two big categories. One of them is actually effectively smart contracts that have bugs in them. They hold a lot of money, but they're decentralized smart contracts. They hold a lot of money, and there's a bug because there's no perfect code, and then that money is siphoned off. There's one category. The other category has been exchanges, or primarily exchanges, especially smaller exchanges that get hacked, and then the money on their wallets gets siphoned off. Those are the two biggest ones. One of the ones, well, we actually try to address both in the sense that every time we list an asset, so we have this asset support framework that is OCC approved, so stamp of approval, and we go through the security aspects. And of course, since our clients are institutions, they are sophisticated, and it's on them to understand if they're investing in the right type of asset and if the asset actually has longevity. But on the other side, in terms of infrastructure, it is our primary job to make sure that the institutions don't get the second category, which is they don't get compromised from a cybersecurity perspective, and that money gets siphoned off. So those are the two biggest categories here. I do think that to a large extent, the industry right now does not have any kind of group that comes together that gives best practices on how these smart contracts and how these blockchains, actual layer one blockchains, should be operating. And I think that's actually something that is missing in the space. And you're seeing innovation on all of these new blockchains that actually have better smart contract programming languages that are easier to prove, that have no bugs. So this is a great development, and it's a development that is happening very quickly. And well, actually, on the coattails of Libra and Diem, that code base has actually been, it's a fantastic blockchain code base, and it's been actually forked. And there's many projects that are coming out of it. So there's many things that the industry is doing right now, and we are self-organizing, and the industry is self-organizing around making sure that the security principles around custody, around smart contracts are actually much better than what they are today.
Good. We have only 11 minutes left, but I can't leave. I need to get to your I really struggle to understand build your own country.
Sure.
What is that?
What's that? So we've started new companies, Google and Facebook, and we've started new, currencies like Bitcoin and Ethereum. And that may be it. Is that where the internet ends? It's just like coins and tokens. We're slaying coins and tokens forever. I like them, but I don't think that's the end. I actually do think that we're going to be able to start new cities and even new countries.
New cities.
Yeah. Well, so new cities is already happening, actually. So this is a book
Can
that
you explain?
Sure.
They're confused. What new
Yeah,
cities?
of course, of course. So there's Culdesac.com, for example, in Arizona. They're building a car-free city in Arizona. There's Prospera in Roatan, which is South America. There's actually 26 of these startup societies around the world that I'm tracking at the Network State dashboard. For example, there's a group in Busan, South Korea, that's actually saying, look, because of climate change, sea levels are rising, so it's kind of a fusion of seasteading and climate mitigation. They're actually building an extension to the city. And you're seeing, things that aren't even like typical cities. For example, Kift in the Midwest of the U.S. has van life with lots of individual vans, and people now can actually travel Utah, Montana, et cetera, on a daily basis and then meet up. And so you're seeing many of these experiments in communal living that are starting, and they're growing, and this is kind of like what crypto was in 2012. It's not really on the radar of most people, but I was in crypto in 2012, and so I think it looks like what it was when I was in it then. So.
Okay, so when we'll see that country in action?
Well, so I know that sounds crazy, but like, for example, El Salvador has recognized Bitcoin as a national currency, right?
Okay. I don't think that they're happy about it now.
Well, they maybe not, but we'll see. We'll see where they are in like 5 years, right?
Okay.
And that's the thing is like with Bitcoin, if you bought it at $32 in 2011, you felt really dumb. Then it dropped all the way down to $2. So you seemed like you lost 90%. But if you bought it at $32 over the 10-year window, you actually feel really smart. And so really the thing is, if, it's saying you can't con an honest man, right? If you're in it for a quick buck, if you don't actually have a long-term thesis on it, yes, you will lose your shirt because you'll see it go up, you'll see it go down, you won't have any idea what's happening and so on. If you actually have a long-term thesis on the instability of legacy states, on the fact that our digital identity is becoming primary, and the fact that people are spending more than 50% of their waking hours looking at a screen of some kind, if you think about it, whether it's a phone like this or a laptop. I know, but basically, if you realize that post-COVID, the digital environment is primary, and it's remote work, and it's cryptocurrency, and eventually it's going to be VR, and so on and so forth, then you think, okay, what does it actually look like to build a polity that is actually premised on the internet? And I think that's what we're going to see. And the fact that that's not priced is why we can potentially make billions of dollars on it. Something. So I'll talk to you in 5 years.
Okay, sure. Look, well, anybody wants to respond to this idea, but if not, I have only 8 minutes left.
Why don't you go through other things?
Okay,
Yeah.
so I'm going to make it a little simpler. Now, I have some cryptocurrency in my wallet today.
Right.
I'm just praying to God it'll gain some value in next few months. That's all I can do today. What do you think, each of you, what in future?
What can you do to boost your portfolio? No.
Yeah, it's just speculation for me. I just don't know what to do with that currency.
Well, let me just point out
So
that
what I'm trying to say, what is the use case?
if you're holding a stablecoin, you're obviously not hoping that it's going to appreciate, right?
Yeah,
And there's,
I'm hoping I'll send to somebody in a smartest way.
or that your current base currency is not going to depreciate.
Yes.
But let me give you a very concrete answer. What is the use case of, I'm not going to call it private money, I'm going to call it super public money, because I don't actually think many of these blockchains should be considered private money. Some of them should, some of them should not. Bitcoin should definitely not. But we had never have a way, we created the internet, we created a global community. It is a supranational community. The internet is not one country. And so we never had a way of a community that is a supranational community that is effectively self-organized across many countries to hold a common bank account. We didn't have this. And we can't have this because if it is a specific fiat bank account, it can't actually cross the national borders. So we don't actually today have a mechanism to have communities and groups of people to have shared bank accounts. So that is one particular use case why internet money that is native to the internet allows you to have these communities. You set up a Discord channel, a Twitter group, whatever it is, and now you are actually having a shared pool of a resource that you can actually operate together. This is a very concrete tool that is part of a toolbox of on the way to what Balaji is saying of actually creating cities and creating nations. It is a toolbox that you needed. You needed the ability to actually hold money collectively. So that is a very specific utility.
Okay.
That is a use case that we didn't have before.
See how Balaji is excited about that response?
Yeah, so I agree with this, and basically I think, I made this list years ago, but really we get programmable incorporation, crowdfunding, sending and receiving of payments, employee equity, user incentives, end-to-end encrypted messaging, identity accounting, M&A, and corporate governance. All of those things are things that you can do in a programmable and or
I think
transparent way on chain.
that
right?
is understood.
But
yeah.
that's like not one use case. That
Yeah.
is essentially primitives. Every single financial action, for example, just sending a wire, rather than taking 2 days, it takes like on the order of 17 seconds with Ethereum.
Sure.
You know, I can send it to Diogo, he refreshes, he sees it. And 300 million people have onboarded into the crypto economy and they understand those use cases. The other thing I would just say is, just to extend Diogo's point, in some sense, international law did not exist before blockchains. Why? If you're in Brazil and you want to acquire a company in Bangladesh, right? Extending Diogo's point, who speaks both, Portuguese and, Bengali, right? Not that many lawyers, okay? Who's going to know all the tax, regulatory compliance things? What you end up doing is you set up an adapter company in the US or maybe China that actually interfaces with both, and you kind of do it through that, right? And that actually means that the entire world economy is actually centralized through one or maybe two hubs. And now, though, with cryptocurrency, that Brazilian and that Bangladeshi can cooperate directly in a smart contract. They can pay each other. They can have fairly complicated contracts. Over time, they can have on-chain entities that are like basically the equivalent of corporations that can then do M&A and
Sure.
accounting with others. So that's actually the future, just like they can be in a chat room together in a way that was inconceivable 20 years ago, but is de rigueur today.
Sure. Well, I'll argue that if banks work very hard, they can do exactly what is said with the fiat money
I don't think they can.
in a digital form.
Well, here's why. It's like saying if Blockbuster worked really hard, they could be Netflix.
Yeah, well, I
They
know
have-
this.
Maybe
Or
not
what-
DBS.
yeah.
Maybe our sponsor,
Maybe DBS will figure it out.
DBS can figure it out. That's right.
Okay. Well, I think I agree with you on if you take the whole financial sector, not everybody has that ability to take a
Yes.
fiat back to digital money and make it work. T+3 to instant.
Yeah, exactly.
Yeah.
Great example. That's-
So,
yep.
So I was just going to say,
what I'm going to do with the money? You could do, so, the
so
difference-
I'm deeply concerned about the money in your digital wallet.
yes.
Too late.
And to your digital wallet, I would apply a couple of quick, easy standards. One of them became a mantra at SFF. The Jerry Maguire Show Me the Money standard. Never invest more than you're prepared to lose, to the extent any of that money was an investment. And don't invest in anything you don't understand. So that'd be my
That already
advice to
happened.
you.
That already happened.
So in that case, and then check what share of USDC you have in your wallet. I would just say a couple of quick, maybe philosophical points. If you went to a regulator today with an innovation called cash, it's not likely, given today's regulatory standards, that it would be approved, because it's backward-looking. It is a haven for corruption, bribery, and fraud. And in the context of a public health emergency like COVID-19, it's a vector for spreading disease. So much so that some countries resorted to actually laundering their money. And so is this a substitute when well regulated for that operating model? Or are you merely marrying up where cash falls short, which is that the only way I could extend it is by physically reaching out? You now have a transmissibility layer where this magic internet connected device becomes your personal SWIFT. The payments utility case is the breakthrough innovation of all of it. And I would say, watch what they do, not what they say. When Jamie Dimon says, if I catch you trading it, I'm going to fire you on the spot, to standing up Onyx, to effectively enabling all of these innovations, it's because the breakthrough is about transmissibility of value, not substitutes for any of the traditional rails. It's just a completely different alternative.
But I'll still hold an argument, places like Singapore, India, have solved it in the traditional construct.
But for whom? Here's the thing.
For people.
For institutional counterparties. And again, many CBDCs, even if they're very well executed and well circulating, at best they're domestic payments innovation.
Okay, fair point.
And we live in a world
point.
that is global.
Yes.
We need internet money for Thomas Friedman's hot, flat, and crowded world.
Okay.
And that's what these innovations are substituting. A good domestic payment system, RTGS system, FedNow, all great. Don't want to create boundaries on innovation. But if you want extensibility of money in global form, and this is why SWIFT, ACH, Visa, MasterCard, all of these networks are starting to adopt stablecoin settlement onto those networks.
So, I mean, that's a fair argument on the cross-border piece. Yeah.
Can I
Sorry.
play off so Dante's point? There's another argument against CBDCs, which I don't think people get, is that CBDCs really put the central bank adverse with their banks, because what they mean is that individuals, it's downloadable currency, right? So right now, if you go to Wells Fargo, you go to Chase or something like that, you can send in between, wires in between digitally, but you can't download it digitally. Like you can download physical cash out of an ATM, you cannot download digital cash down onto your computer. You can with USDC, right? A CBDC is actually something which reduces the lock-in of banks and allows people to download currency, if you allow that. And if you do allow that, then you actually have something which is similar to what happened with the newspapers, where once they all put their articles online, well, Google News could index all of them. And I think what people haven't thought through is the next step. Once you actually have these 105 countries, if they actually do CBDCs, well, they all get put in the DeFi matrix, which is every asset versus every asset at all times. And so every currency is competing for its bread, the Swiss franc with the lira, with the this, with the that, in this global all versus all. And nobody wants to hold any but the very, very best assets. And just like all of those local papers, the Miami Herald and the so on, face competition they'd never faced before because they lost their local domestic monopoly, a lot of these CBDCs, once digitized, will face that issue. So that's also a disincentive to do this. It may not actually increase the strength of these countries' control of their population, but decrease it. Something to think about.
Okay.
Let me just add one point on the CBDC angle. I think if you are pushing all innovation to happen in CBDC, you essentially end up with this weird problem, whereas it's effectively the money equivalent to the Everton window. Every single innovation is within the window, and there's no pushing the boundary because it's perfect enforcement, because it's within CBDC. And a lot of the things that exist today that are great things that are happening a little bit outside to the left or a little bit outside to the right. If we had innovation happening in CBDC versus permissionless stablecoins, that would not have happened, and we would just have a static society.
Okay. We have a well-regulated stablecoin, but as long as the underlying is not US dollar.
And the MAS is great, by the way. I forgot.
Last
It needs to go at the end of every sentence.
both of you a minute on what to do with my.
Sure. So I agree with certain comments, not all of them. I think what I would add on is depending on what's in your wallet, which I don't know, I think what you do with it depends on your belief in terms of what degree of the tech stack of a digital asset is going to be allowed to be integrated into mainstream finance. How do you see the future of mainstream finance actually turning out so it increases the likelihood that there's utility in any given use case? And I think I think no matter what, there's some convergence of current technology and players in the market that is going to happen into the future. I don't think you're looking at existing institutions that are operating in a particular way, staying over here, and a lot of the newer crypto-focused institutions staying over here. No matter what, you're looking at an integration of technology. And it's a question of how much of that is going to be integrated. And I don't think an extreme case of complete disintegration, if you will, or complete decentralization is a realistic outcome. And so with that, what does that mean? I think a lot of that hinges on how you view the future of money, right? The future of transactions, which is where we started the panel and a lot of discussions of CBDCs versus stablecoins versus any other crypto asset. And the one thing I would say about how you view the future, again, is the degree of integration is going to be significantly impacted by regulators allowing that integration to occur or not. And so in the case of the BCBS and the infrastructure add-on, where they're making it more difficult for banks to actually use various technology, I would agree with Dante. There's an example of something not being technology neutral, and not necessarily a productive way to move forward.
Sure. Well, we are running out of time, but I thought I have got a lot of questions here. The best way to represent all the questions is to ask one reverse question. Is that one thing regulators should not do as they're thinking about regulation? I'll start with you.
They should not inhibit or infringe user custodial wallets.
Okay.
Like private keys local on your computer shall not be infringed.
Which is the unhosted wallets should not be.
Well, unhosted, really, hosted wallets are the aberration. The wallet is actually, so let's call it custodial.
Personal wallet.
Yeah, personal wallets should not be infringed.
So they should not see what is inside that, in my wallet.
Well, it means, for example, in the US, there's various state legislatures that are probably going to pass anti-seizure laws, right? Which are like, you cannot take my Bitcoin, you cannot take my cryptocurrency. Right?
Yeah.
One thing.
One thing. Oh man, that's hard. The one thing is don't ban the innovation. Start there. At the aggregate level, I mean, the earlier panel, we heard, I think, some pretty vocal sentiments about banning it. It would be to be on the wrong side of history. I mean, there's a reason state houses, the White House, the Queen's Speech, parliaments all over the world have made the technology a matter of economic competitiveness and national security.
Don't ban good work, if it is.
Bring them into your perimeter, and you'll have an industry that creates jobs.
Okay. Should not do.
I think I would follow some of those points here. It's okay to regulate and control the interfaces between traditional finance and digital assets, but we need to let the native space grow, Web3 in particular. We don't know yet actually what are the use cases that will be bringing hundreds of millions of users and create massive economic opportunities. So we need that space, including digital wallets, live to a certain extent and get to scale. Interface is okay.
Eric, look, today regulators don't control the network protocols on internet. Anyway, I don't think they'll do it, but I think they will control the edges which interact with that network. That's a fair statement. Jessica, what regulators should not do?
As someone who grew up in the Fed during the financial crisis, I would say they should avoid trying so hard to protect and insulate the banking system that they push the whole or the totality of the risk that will still exist outside of the area that they can regulate.
For a change, you agreed with them. Do you realize, Jessica? You said
Yeah, I would have to. I mean, if it was primarily American regulators, I would say that, technology is not Republican or Democratic.
I didn't sitting here, okay? So
Yeah, Bitcoin is not a Republican technology. It's I don't know how we got here. So the bipartisan nature of the technology is very obvious to everyone, except that the folks that are in the political class. I don't know how we've gone here, but it's a bad state. Otherwise, I think on the point of banning, on the prior panel, there was a comment about drugs. I think it's actually an interesting one. So think of cryptocurrencies as drugs. We don't allow drugs, and it's not a good point to say that we should allow them because drugs are bad, so we should obviously ban them even if they will continue to exist. That was kind of the argument that was done. But actually, drugs are a great example, and there's many countries that have decriminalized all drugs and then created the enforcement on other portions of the drug supply chain. So it's, for example, Portugal. All drugs are decriminalized, but it's still possession with the intent to sell is criminal until you go after that activity. That is a really good way of looking at, I'm not banning all drugs. Drugs are all decriminalized, all of them, except that I'm focusing on the things that actually matter. That drugs are actually a great example. I mean, even in the United States, my prior point, now we have a federal path towards legalization of marijuana, something that was in a schedule alongside heroin. What was that? I know, Singapore is like completely banned, but as the equivalent, I'm saying that there's an alternative.
Great example.
And you have countries in the US, like the US, that are actually like moving the post here. So if you use that example of drugs, you have to recognize there's many countries in the world that have a take that is a very distinct take.
Okay, thank you all. It was a fun conversation talking to all of you, and you do interact with our...
And the MS is great.
Yes. And with our media folks here, there's nothing to criticize here. They just had a shared opinion. I know CNBC reported that during the debate, CNBC said that Brian criticized regulators. It was a debate, it was a conversation. It's nothing about criticism. So keep that way, keep that spirit. Thank you very much.